Volatility expanded across multiple session anchors while price interacted with prior U.S. session memory. The market did not begin this sequence in empty space. It began inside a structure already defined by earlier session boundaries. Session memory continued to govern interaction, even while price moved higher, even while distance expanded, even while volatility increased. The March 3rd U.S. session anchor formed between two older structural references. Above it sat the upper boundary of the February 26th U.S. session range. Below it remained the structural memory of the February 1st Asia session anchor. This created a layered containment field. Price was not operating freely. It was negotiating space between prior session decisions. The March 3rd U.S. session range did not remain intact for long. Interaction moved beyond its upper boundary. Extension appeared quickly. Distance expanded. But the movement did not travel into unexplored territory. Instead, price engaged the March 2nd Asia session range. The interaction tested the middle lower portion of that Asia session structure. This behavior is significant because expansion alone does not redefine structure. Expansion only introduces pressure. Structure changes only when interaction persists beyond prior containment. In this case, persistence did not immediately stabilize. Price moved through multiple memory layers. First, the U.S. session boundary, then the Asia session boundary, then back toward earlier anchors. The March 3rd Asia session anchor formed at a narrow intersection of two structural memories. Above it remained the upper boundary of the February 26th U.S. session structure. Below it remained the lower boundary of the March 2nd Asia session range. The session opened directly inside a structural intersection. This matters because intersections compress available space. When session memory overlaps, movement often accelerates temporarily. But acceleration does not guarantee relocation. In this case, interaction intensified inside overlapping containment. Price briefly moved outside the Asia session anchor box. That movement did not stabilize immediately. Instead, price rotated upward again. The market returned toward the upper boundary of the March 3rd U.S. session range. That boundary aligned with the March 2nd U.S. session upper structure. Structural memory was repeating. Interaction was not random. Each movement revisited a prior reference. Price advanced again. But the advance did not travel into open structure. Instead, it approached the midpoint of the February 8th Asia session anchor. The market was still negotiating historical containment. Session memory continued to dominate behavior. Even while volatility expanded, even while candles appeared strong, even while distance increased, structural memory remained active, and interaction continued to occur inside those boundaries. Price was not relocating. It was processing. The slope of the 20 moving average accelerated as candles continued rising away from prior session interaction. The increase in slope reflected persistent upward pressure across multiple session transitions. But slope alone does not determine structural relocation. Slope measures directional persistence. Structure measures positional acceptance. Distance from the 120 moving average expanded gradually. This distance expansion created the visual impression of strong continuation, but structural memory remained close beneath the movement. The 120 moving average itself continued to slope upward, not aggressively, but steadily. This matters, because structural weight from higher timeframe averages rarely relocates quickly. They move through time rather than through impulse. So even while price expanded away from the 120 moving average, the structural relationship remained active. Distance expanded, but the reference remained. The market was stretching, not escaping. During the March 3rd Asia session, the upper boundary of the 20 Bollinger Band expanded. Volatility increased during that session. Bandwidth widened. Candles pushed toward the upper envelope. This expansion phase introduced short-term directional pressure. But volatility expansion is only the first phase of structural movement. Persistence determines whether expansion stabilizes. In the following session, the behavior changed. During the March 4th Asia session, the 20 Bollinger Band began contracting. Bandwidth narrowed. The expansion phase paused. Volatility transitioned from expansion to compression. Compression following expansion is not unusual. It reflects temporary equilibrium after directional acceleration. The market pauses. Interaction increases. Candle bodies narrow. Wicks begin appearing more frequently. Short-term movement becomes rotational. This compression phase is structurally important because relocation cannot form without duration, and duration requires stability. Without compression phases, expansion cannot stabilize. At the same time, the Bollinger Band displayed a different behavior. During the March 3rd Asia session and the March 4th US session, the Bollinger Band widened significantly. Both the upper and lower envelopes expanded sharply. Short-term volatility intensified. These expansions reflected rapid internal fluctuations. Movement inside the session structure became more reactive. Short-term participants responded quickly. Interaction frequency increased. But high short-term volatility does not necessarily redefine structure. Often it simply reflects negotiation inside containment. And this negotiation continued. Even after volatility expanded. Even after candles widened. Even after the market appeared aggressive. Structural boundaries remained present. Session memory remained active. Interaction continued inside those references. The market was processing volatility, not escaping structure. The March 4th US session anchor formed higher within the broader structural memory created by earlier Asia sessions. This anchor developed within the middle upper region of the February 8th Asia session range. Once again, price began its session inside prior structural memory. The market did not establish a new structural field. It re-engaged an existing one. After forming, the March 4th US session range briefly extended above its upper boundary. The movement pushed toward the lower boundary of the February 4th US session structure. Another historical reference re-entered interaction. This is a recurring behavior in session-anchored markets. Price expands, but expansion quickly encounters older containment. The market does not move in isolation. It moves through layers of historical interaction. Each layer represents previously processed liquidity. Each layer carries structural weight. The March 4th Asia session anchor then formed near the upper boundary of the February 8th Asia session structure. Price began that session near historical resistance. Interaction immediately slowed. Instead of expanding further, movement remained contained within the Asia session range. Candles fluctuated, but boundaries held. Short-term volatility compressed again. The Bollinger Band, which had expanded aggressively earlier, began contracting. Upper and lower envelopes moved closer together. This contraction reflected declining short-term volatility. The market paused again. Not because movement ended, but because structure required stabilization. When volatility compresses after expansion, interaction becomes more frequent. Small rotations dominate. Participants reassess position. Structural pressure redistributes. At the same time, the 20-moving average maintained its upward slope. The distance between the 20-moving average and the 120-moving average remained wide. That widening reflected the cumulative effect of recent directional movement. But widening distance alone does not finalize relocation. Distance shows expansion. Acceptance requires persistence. Persistence requires duration. And duration can only be observed through time. The structure, therefore, remains in negotiation. Session memory continues defining interaction. Volatility cycles between expansion and compression. Moving averages continue adjusting through slope and distance. And price continues processing inside layered session containment. Execution conditions remain in transition.